Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Checking in on gold, starting with the dollar. So we had this clear level, and look where this came from. This is a line that I just left on my chart, and I'm going to look back at the 4-hour chart, and it comes from this consolidation back in mid-December. We bounced off 102.52, so I drew this support line back 3 weeks ago because I knew that was an important support, and then I just left it there. And look on the hourly time frame how this level has come back into play. A bounce attempt got up to 102.51 and rejected. A bounce attempt today got up to 102.52 and rejected. So we have a double top where previous support was, and it's now acting as resistance. And we had a tightening range where we still maintained higher lows on the hourly, rejected from resistance, still maintaining higher lows. And as soon as we broke 102.17, the low of that consolidation, that's a clear bear break, and we are now pulling back from that double top of resistance. So support here is 102.05, then on down to 101.76, and the bears are still in control of this trend because we're not seeing higher highs on this bounce attempt. The bulls have to break 102.52 for that to occur. So with this, we see gold hitting a new high, and we had that high up at 111.84.90. We got up to 111.86.11. So a nice higher high after holding 1170 support. We still maintained higher lows, 1170.41 and then 1170.81. A nice higher low, higher high. Seeing a little bit of consolidation now, and we did see some selling in the miners here. At the end of the day, that was not correlated to SPY weakness, and it was not correlated to gold weakness. So there was profit taking. We almost closed at the low of the day. We saw a little bit of a bounce with a tiny lower wick here at the end of the day. Inside candlestick on the daily time frame. At this point, it's still normal, healthy consolidation. After the breakout above the upper Bollinger Band, we lost the upper Bollinger Band last week. Still maintaining exponential moving average support and still looking strong. The key levels are on the weekly time frame. Look at this middle Bollinger Band on GDX here. 23.02 is that resistance. It rejected the price last week. It rejected multiple weeks, 3 weeks here back in September. So it's a very clear weekly resistance the bulls want to get above. Let's check in on GDXJ. There was a big difference between these two names today. Look at GDXJ and the junior miners stronger. We are rejecting from the upper Bollinger Band resistance, but we did break the high of Friday. So definitely a difference in the two names. GDX didn't break the high of Friday by 15 cents, and GDXJ did. Checking GDXJ on the weekly, that middle Bollinger Band, we're right there, 36.28. So bulls really want to regain that level and have that as support moving forward. So again, normal consolidation on the daily, bulls still in control on the daily, and it would take a loss of 1170.41 to have the bulls concerned in the short term of this trend. And the dollar, we're watching 102.52. And so that's showing a little divergence there as well, where we have the dollar still significantly 60 cents above its low, but gold still managed to hit a higher high. So if they were directly correlated, the dollar would have dumped and broken 101.30. But obviously that didn't happen, so the gold bulls strong on their own, Not nearly as weak a dollar as you would anticipate, but bulls looking good. So let's check in on the daily time frame. That key 10-day moving average support, as we know, is a must hold. It's continuing to catch up. It's currently at 1157.36, and it increases each day. We have not confirmed a bearish reversal candlestick since this bounce started. Had one here, negated it. Had one Friday, negated it again. And we can see that key 1170 support. Bulls want to see a close above 1180. We're on the verge of doing it on this daily candlestick. That would be a good sign, closing above that resistance and looking up towards 1200 psychological. There are still a few other resistances here, 1187.83 and then 1197.46. So those are two levels to be watching. Might as well put some lines there so we can keep an eye on them. But the bulls are still holding on and still looking good with that nice higher high today. So we'll check back in tomorrow and see how it plays out. I appreciate you watching. Have a great night.